Hcmc stock update today. So as things stand right now in this session of the 22nd of August 2022, it is trading at $0.0002, down 25%, and 69.6 million shares, 696.4 million shares have crossed the tape, which is above average. And the reason why this is the case is because the company has announced a 4-point plan to increase shareholder value. They are, the 4-point plans are a buyback of common stock, subsidiary spin-off, stock dividend, and equity capital raise. So down here we can see it saying here that there's a buyback, a $5 million stock buyback, which represents 27% of Hcmc's current capital reserves and approximately half of the amount invested by non-institutional investors during the rights offering of July 2021. That rights offering had a maximum raise amount of $100 million. However, a total of only $27.4 million was raised, with approximately $10 million coming from the 400,000 army of Hcmc investors, and then the rest, which is $17.4 million, was raised by institutional investors. So the new share purchase program is designed to return value by offsetting dilution from stock issuance. We'll get to the dilution that will occur. We'll get to that in the later points of this 4-point presentation, 4-point plan. So there's going to be a spin-off. All the entities and the stores and subsidiaries of Hcmc today, we know. I mean, the Ada store, including the ones that were recently acquired. All the entities we know as part of Hcmc will be spinned off, and then Hcmc will now be the overarching principal parent, and then it will hold the entire patent suit and will continue the fight with Philip Morris as it concerns the patent infringement. So Hcmc will be there and will be fighting the fight and defending this newly spinned off company, and that, according to them, that they hope to list on the New York Stock Exchange. That would be really good, So, but in any case, what is clear now is that there will be two companies: Hcmc, the parent, and then the new spin-off that will be trading on the New York Stock Exchange, or indeed any of the exchanges. Then there's going to be a stock dividend, and it's saying here, to be clear, the stock dividend will be issued at no cost to Hcmc shareholders and will not decrease the number of shares they own by a shareholder. So, like I said earlier on, there will be two companies: the spinned off company and Hcmc. So there's a good chance you're going to own something in the new company, and also whatever you own in Hcmc, it's not going to change, still going to remain there, So but also they also pointed out that Hcmc, the parent company, will have little assets because a lot of the assets will be spinned off, so it will have far less assets, So expect something to come in that regard. So to be clear, okay, we've mentioned that, and okay, we'll not reduce your reduce the number of shares you own in Hcmc. So on a record date to be determined and announced at a later time, Hcmc shareholders will receive a stock dividend in the form of common stock in the new company. Each shareholder's stock dividend will be determined based upon their percentage ownership of Hcmc on the record date, subject to dilution because there's going to be a conversion. Because they are raising funds. We're going to talk about that conversion in the last point we're going to look at right now. Okay, so and if a whole and some other issues that are going to affect the dilution, like stock options and all that stuff. So each shareholder will own the same percentage of the new company that they own in Hcmc. Okay, so subject to certain conditions, of course. So it is anticipated that the new company will have an initial price of $10. So in order to qualify to receive the stock dividend, this is also where it's very, very tricky as well. A Hcmc shareholder dividend entitlement amount must be at least $10. In other words, if your dividend amount, if you have been issued the shares, and if you have been issued in the shares of the new company and it doesn't amount up to $10, then you wouldn't receive the new company's shares. It is from $10 and up. So for every $10 you get one common share of the new company. So that is how this is going to transpire. So down here we can see the equity capital raise. They're saying here, insofar as HCMC, okay, well, as we pointed out, would no longer have the same level of assets or an income it currently enjoys from its retail stores. HCMC has completed an equity capital raise with certain institutional investors under the Series E preferred stock. So Series E usually is the last stage of capital raise before a company goes public. So the last set of fundraising activity before the company goes public is called the Series E. So that is, you can see the new company is going public. So that is why it's this will be the last. $13.25 million is what they have raised. So that's why it's called Series E. And preferred stock usually is a hybrid of bonds and shares, but it lies in between bonds and shares. It is a subordinate of bonds, but more superior to shares. So this is what is going to be has been issued and will result in $13.25 million in gross proceeds to HCMC if all of the preferred shares are converted, as opposed to being redeemed for between 5 to 10% premium depending on the timing of the redemption. So in addition, in order to properly fund the new company, contractual investment commitments of that amount, 13.25, have been made by those institutional investors. Okay, so it is from there, I believe, that that $5 million will be used to buy back some of the shares that are already in the pop, some of the HCMC shares, because this dilution is occurring right now. It's going to occur. Then they're using 5 million out of the 13.25 million, I believe, wherever it comes from. But 5 million is going to be used to buy back, because there's some dilution will be occurring. So they're now saying, in summation, they are cognizant that HCMC institutional capital raise may result in additional shares being issued, yes, in an event that the preferred shares are converted. So however, we believe that they believe that because 100% of the initially issued shares of the new company will be given to HCMC shareholders in the form of stock dividends, subject to dividend conditions partially described above, this will bring immediate meaningful value to their shareholders. Furthermore, by authorizing an HCMC buyback program, as also described above, they are attempting to enhance HCMC shareholder liquidity and increase shareholder value. So this is what the 4-point plan is. This is what the 4-point plan is. So the new company is going to have far less shares. It's not going to be bloated in the hundreds of billions. It's not going to be like that. But what is absolutely certain is that if you owned only 1% in HCMC, you will own 1% by the time it hits the market and starts trading. That's what the case is. But yeah, that's what's going to be the case, and it's still open to you to buy more, and go on from there. So in a nutshell, it's they're trying to project HCMC at elevate it. This is against taking HCMC today and doing a reverse split and then maybe uplisting it. So they are doing it through a spin-off. So in summary, they are just spinning off the assets and putting it in on an exchange, because right now it's not trading in an exchange, it's trading on a medium. So when you put it on an exchange, we will get what we are yearning, at the same time also maintaining whatever we have in HCMC. So in a nutshell, this is what's going on with HCMC, and the market is going to close in about a minute or thereabouts. So thank you very much, and see what you make of all of these things. Market participants are buying more. Are you buying more yourself? Okay, so thank you once again.